Welcome back to another exciting trip around the crypto canaverse. I'm Crystal Cruz, your host and moderator for today. I am being joined by my amazing team of co-hosts, which are Jacob Livingood, Crypto Kenny, and Alan Lau. Today, on our 126th episode, we're diving deep into the world of on-chain wealth, digital trust, and the future of finance with two powerhouse guests who are shaping the crypto landscape in big ways. First up, we have Adam Blumberg, co-founder of Enclave Group, a company helping crypto founders and investors protect and manage their digital assets. He's also the brain behind Interaxis, an educational platform teaching financial pros how to integrate crypto into their practice. Then next up, we have Gregg Bell, Chief Business Officer at the HBAR Foundation, Hedera, the leading enterprise-grade distributed ledger. From Wall Street to Web3, Gregg has been at the forefront of financial innovation, helping build the next generation of decentralized trust. This is going to be an epic conversation on crypto and the financial revolution of Web3. Tap in, grab your favorite drink, and let's get to it. But before we get started, I am going to pass the mic over to Alan Lau and Jacob Livingood to introduce our Bible verse.
I'd like to go ahead and read the scripture, and then Alan, you can feel free to elaborate on it. And then we want to open the floor to everybody to talk about how that impacts them, how it resonates with them. We're reading in Galatians 6:9. Let us not grow weary in doing good, for at the proper time we will reap a harvest if we do not give up. Alan, how do you take this?
Galatians 6:9 encourages perseverance in doing good, even when the results are not immediately visible. It acknowledges that doing what is right can be exhausting, but it reassures believers that their efforts are not in vain. In God's perfect timing, their faithfulness will yield rewards, just like a farmer who patiently waits for his harvest. This verse reminds us to stay consistent in doing good, even when life is tough and results seem slow. It also encourages us to trust in God's timing, knowing that the harvest of blessing, breakthroughs, or spiritual rewards will come at the right moment. Most importantly, it urges us not to give up despite challenge, disappointments, or delays. This is a message of hope and encouragement. Keep going, keep doing good, and trust that God sees your efforts. The reward is coming. Gregg, you chose this verse. Can you share with the audience, and also anyone wants to open up on about this Bible verse? Gregg?
I think there is an ethos in the crypto ecosystem and abroad that is, HODL in many ways. It's to maintain, it's to hold tight with the belief, the fortitude that there are positive things to come. And so, that I think is the message that I feel resonates with a lot of people in the industry. And that's where I felt that correlated maybe here.
Absolutely
Beautiful.
Thank you.
I'd like to add to that, because I think it's really beautiful when you're doing good and you're maybe obfuscating short-term gains for long-term gains in a way that's less quote unquote optimal for the now. It makes it more turbulent and difficult. I think you're dealing with a harder path, but actually it's going to be more rewarding in the long term, and you might not see that growth initially. But giving up, quitting, taking your hand out of the pot and just going, I'm done with this, that's going to ensure that you never reap the rewards from your harvest. So it's going to get tough. You might go through turbulence and tribulation, but that's going to prune your character and you will win eventually. I think that can resonate with all of us. Crypto Ken?
I also like the analogy of like the farmer patiently waits for his harvest. So if you think about a farmer, they put a lot of seeds to, and see which one would sprout. And not all of them will sprout. Some would die, right? Some would not sprout at all. So planting the seeds and consistently watering, providing the sun and caring for it, you will see the harvest. But yes, the time of waiting, the time of seeing if it will sprout, seeing if it will grow, seeing if it will, turn to a fruit or a flower. That takes time, it takes patience, and it takes just consistency. So I'd like to add to that. Thank you for sharing.
I love it. I think consistently investing in Bitcoin mining and Bitcoin, you have to be patient. You have to be, durable and resilient. Kenny, you have a question.
Yeah, I just wanted to say I really think that particular verse really speaks heavily to entrepreneurs, right? And I think understanding that passage really separates those that are successful from those that aren't, right? Because you have to understand what kills a lot of entrepreneurs, especially new ones, is the understanding that many times you have to walk through a lot of failures to find the thing that works, right? You have to be prepared to try and try and try again, and to develop your method and your approach each time in order to get to something that's good. True entrepreneurs, just like the faithful, understand that we have to develop after each mistake, right? We're not here to knock it out of the park the first time. We're here to try something, to take the good from it, to apply it to our next try, and to continue to improve. And I think that's really that's something that everyone that is trying to build something for themselves, that is trying to create a business or scale a business, or to create a charity or scale a charity, or whatever the case may be, you have to understand that the road is often riddled with issues, but you should take that as not as a derogatory thing, but as an opportunity to glean lessons from it to create the next iteration that is far better than what your first one was. So I think that's really interesting, and that's kind of what that verse speaks to me.
Thank you. Jacob?
I just think that's beautiful. And to reiterate in less words what I said the first time, it's like if you quit, that's going to guarantee you never make it. Whereas if you just keep enduring through the difficulties and the tribulations and the pruning and the valley of the shadow of death, so to speak, you will learn, grow, take and internalize the information that you get from the quote unquote failures, which actually aren't really failures. They're just learning opportunities, and you will eventually make it. So it's beautiful.
Thank you. Great comments. Do we have any other comments before we move on?
I would just say I love the part about trusting God's timing, because I think that is, we look at even just what's going on with the markets now. I mean, I would take these short-term losses, volatility, and, turbulence for, a much better path, a light at the end of the tunnel, for the future and for our kids' future. And I think that's where we're headed. I mean, we couldn't be going on that same direction. It was just unsustainable financially. So I love that part of it as well.
Thank you. Jacob?
I would like to take this time to thank our sponsors, NC Management, for over 25 years in excellence in digital innovation and their commitment to guiding businesses through the complexities of modern technology. Their expertise in Web3, blockchain, and custom-built solutions ensures the successful digital transformation for all their clients. Check them out at ncmanagement.io. Want to become a sponsor? By sponsoring us, your business information is shared monthly to our exclusive network of family offices, venture capitalists, angel investors, founders, and high net worth individuals. We also create customized graphics that highlight our sponsors in our newsletter, on social media, and we thank them live on air. As a special bonus, if you sponsor us for 3 months, you'll gain access to our investors list. To become a sponsor, please email info@cryptocanaverse.com or reach out to Crystal Cruz on LinkedIn.
Thank you, Jacob. Our first guest, Adam Blumberg, educates financial professionals about digital assets, cryptocurrency, and blockchain. His YouTube channel has over 12,000 subscribers. In 2021, he launched a course that has educated over 2,000 professionals on integrating crypto into their practice. Now he's launching an on-chain RIA. We're excited to welcome Adam Blumberg to share more about his work. Welcome, Adam.
Hey, Crystal, how are you? And everyone else.
Wonderful. Thank you for being here. So Adam, what inspired you to launch Enclave Group?
There's this guy named Clayton. You probably know him.
You might know him.
Yeah, you might know him.
Yeah.
But actually, look, I had an RIA before. I had a financial services company for years. Very very traditional. Our clients could not have been more conservative and traditional. And then I went, I sold that company. I've been teaching crypto to financial advisors, RIAs for years. And now I think we're at this point from a regulatory perspective where we're going to have hopefully some regulatory clarity, where hopefully we have a SEC and a Fed and an OCC and everyone else with a whole bunch of letters in the government that are going to be more amenable to what we're doing, at least to the innovation part of it, hopefully not to the grift part of it. And it seemed like the time and looking around, no one else, even the people I was teaching this to, were building anything that specifically was for either crypto founders and investors or crypto protocols. And we know, and Clayton and I have talked about this a lot, we know in the coming years there's going to be just a ridiculous amount of on-chain money when you talk about stable coins, real world assets, native crypto assets, all sorts of funds, private credit, NFTs, whatever it might be, that is all on chain. And someone is going to have to manage all that, all those capital pools, all those liquidity pools that are not necessarily cryptocurrencies, not necessarily volatile crypto assets, but real assets, real people's money from all over the world is going to have to be managed. And it likely is going to have to go through some sort of registered entity, someone who has to answer to the SEC, someone who, as I always say, like, if I don't do what's in your best interest, I go to jail. That's pretty strong. I really, really like not being in jail a lot. And I want to, I guess we want to, myself and Clayton and Jason and Nate, who are the other partners, we really want to get that started, and now's the time to do it. There's so many assets on chain. There's so many stable coins. There are companies that are starting to get paid and pay with stable coins and go on chain, and they don't know what to do. There's plenty of these crypto founders, those people that have, all of a sudden they go from being worth nothing to being worth $50 million in a day, and they generated wealth, as an entrepreneur, just like someone did in Facebook back 20 years ago. And they deserve to have their wealth helped and managed just like anybody else. They're helping with innovation. They're helping with the economy. And so we need to give them that help. We need to take the expertise and experience we have in kind of traditional finance and bring that over to the experience and expertise we have in the on-chain world. So I don't know, I kind of lost where the question was at some point in there.
You did fantastic.
Okay.
That was a great answer. Clayton, did you want to add anything to that? No? Okay. Adam, in your response, you mentioned your partners, and we all know that partners can make or break you. So can you give me the reasons and tell me why you partnered with the partners that you have on your team?
Sure. Why not? I was already some of it is very circumstantial, I guess, but I was already working with Clayton at a multifamily office, and we were both seeing that there were some of these crypto founders that we talked to, that we knew that were that were not really good fits for what we were doing before. And someone was going to have to build this, and it might as well be us. We're the ones that are willing to push the envelope, and you need other people that are willing to kind of go along with the craziness, I think, and have that fire lit under them to say, not only I want to make money, but I believe in this. I believe that what we're doing is the right thing, and I believe that this ecosystem is great. Then we brought on Jason Leopold, who Clayton and I have known for a little while. That was actually very serendipitous. In that I bumped into Jason at the Whole Foods around the corner from my house just before Christmas, and happened to mention I was meeting another friend of ours for coffee in a couple of weeks. Why didn't he join? And when he joined us for coffee, I started talking about this potential RIA that Clayton and I were starting. And he said, "Oh, I want to be a part of that. Here's what I do." And Clayton and I said, "Well, we kind of need that too." And then, our other partner, Nate, who Clayton's known for a while, who's a great operations guy. So it's like you got all these different parts of the team that you need that can serve different purposes. We all kind of are aligned going to the same direction. We all have different expertise and experience and goals. And I think it's important to have different parts of your team, different members of the team that can perform different functions and have a different expertise, but all kind of aligned in the same direction.
Absolutely. You have to be aligned to be a successful company. I'm going to open up. Do we have any questions or comments on on the last two questions that we asked?
I have
I just
one.
want to jump in real quick and say, I think this is exciting. Very cool, very fascinating. The RI space is something that I've worked in for several years. I was a private banker for almost a decade. So it's definitely a need that I've been seeing going to be developing in the crypto space for a while, as you guys obviously have. So very exciting, and kudos to what you guys are doing for launching. I guess just the immediate question that some people might be thinking, former clients of mine that might say, how do you guys plan on, and you can answer this from a very high level, but navigating kind of the on-chain transparency that crypto brings, or should I say blockchain rails bring, with making sure that clients' information is still private, sensitive, and secured?
That's a really good question. That's a tough thing. One, Jordan, if I had known you were going to be on here, I totally would have worn my global stake stocking cap that I wear when I walk the dogs in the morning. So I appreciate that. It's my favorite one. It's very bright white, so when it's dark in the morning, everyone can see me. The question about how do you the juxtaposition of the extreme transparency of blockchain technology and the need to keep information very private. Clayton can speak to this a little bit more, but we're navigating that through a series of structures that Clayton helps establish, LLCs and trusts, that can have accounts at various custodians. So often we actually we can use custodians like Anchorage, BitGo, Crypto.com. And so if you have a structure like an LLC that has an account at Anchorage, yes, there is some transparency into movement of assets, but there's not necessarily transparency into whose they are, right? So we can navigate a good deal of the privacy that way. If you're going at like purely on chain, there's also going to be some, I guess, help and assistance in setting up the appropriate wallets, right? So you're not going to have Adam Blumberg.eth being like the main holder of all my assets, because everyone's going to know who that is. It's going to be some wallet hygiene, setting up new wallets, obfuscating who the people are, not from the perspective of wanting to, necessarily hide anything from the government, but from the perspective of wanting to hide things from whoever else is looking. And as you know, anyone can look anytime, and that's a big part of the lift, and that's where we're trying to help some of these founders, especially. Yeah. I mean, we've heard some horror stories lately of founders that have a crazy amount of wealth being, kidnapped and held at gunpoint and all that. We don't want anyone to know where your house is, right? Like we don't want anyone to know what car you drive and such. And so, yeah, there's definitely some work to be done there in marrying those two things that we like about it, right? The transparency and the privacy.
Yeah.
Clayton, you had something else?
Yeah. One thing that's overlooked all the time, like I rarely even hear it addressed, which is actually a cornerstone of a lot of the stuff that we're doing. And it stems from the question that Jordan asked about keeping clients' privacy private. Safety is massive and something that is largely overlooked. And like Adam said, we all know a lot of people, either personally or through a friend, that's been kidnapped, received death threats, like all sorts of things because someone found out a wallet address or just for being who they are. But keeping people's on-chain identity anonymous and while still remaining transparent. Like those are two really difficult and kind of oxymorons at the same time. But also, when we start working with somebody, finding out if we can find where they live very easily. I mean, somebody can just Google you and find out where your address is and go knock on your front door. That's not a good thing. So protecting against all of those types of security issues is something that is a cornerstone of what we're doing, and we take quite seriously. I mean, we even do it for ourselves. So it's something that's near and dear to all of us.
Can I ask, is that kind of secrecy and protection, it's kind of table stakes for anybody now, isn't it, for representing these people and setting it up?
Yeah.
We've seen mistakes over the past 8 to 10 years that in hindsight just look like a massive oversight for people, and now you've seen it happen. So can you just go through what should people beware of doing? I work at a crypto hedge fund, by the way, so not a retail thing. I'm sorry I missed the introduction, but what do you tell people to do if they're in the middle of this right now and where do they start? Hiring someone like you, essentially, what would be their step to, or what would protect themselves immediately?
A lot of it is how you own your assets and how you go about your everyday life, and how, for lack of better words, how you interact with the world. Those are all pieces that are really important, because if you own something, and when I say something, that's typically something that's titled, you've had to sign for it, and now your information is out in the ether, and most people with any reasonable Google skills can find it. That's a big one, and that also
identity-wise, it's hard to protect your identity.
Yes.
What do you do with your hot versus cold? What do you do with custody? What are some?
Yeah.
What are the classic mistakes that you can warn people against? Is that a question for another time? Should I?
No. It again is how you interact with the world. Are you somewhat careless and do a lot of stuff from your phone and hook up to private networks that could expose your data to wrongdoers? I mean, that's something. So right there,
VPN and
exactly
being careful and VPN on your phone and password managers and all just the general stuff.
Going so far as to, if you are to do crypto transactions from your phone, maybe use a different phone than the one that you talk on all the time.
That's a great point, actually.
That's something. Or if you go to a conference, a crypto conference, maybe you don't log on to the Wi-Fi. That's probably a good rule of thumb.
Airplane mode or whatever, right?
Exactly. It's little things like that to us are common sense, but a lot of people don't think about it. And once you mention it, people put 2 and 2 together, like, that actually makes a lot of sense.
I love
they're not paranoid if they really are after you, kind of thing.
Yeah.
We're going to go, thank you for those comments. And I just want to add, own nothing, right? That's another strategy to protecting yourself as well, which I think you mentioned. And then as far as the hiding your clients' information and security, Hashgraph or blockchain?
That's a good question.
That is the question.
That's a great question.
So
I remember working with estate planners when
Alan, hold on one second, buddy. We have to move on up to Kenny. He has his hand raised.
Right.
After Kenny, we go to Jacob, and then if you have a comment, that would be great.
Yeah, all great stuff. What I wanted to ask Adam was, since he had mentioned that he had ran a traditional financial advisory firm before, and now Enclave is being spun up. Adam, what's the like major differences you're seeing in preparing yourself and structuring the business in the traditional sense versus now being centric on, crypto in the tech sense? Like what's the major differences or maybe, pros and cons of each that you've kind of experienced in developing both of these?
Okay, so if you're talking about like getting it set up, going from 0 to 1, basically, a traditional RIA getting set up is ridiculously simple because you know who the custodians are, right? You got like Schwab, Fidelity, you got some others like Altruist or Interactive Brokers or something, but they handle a lot of that, right? You just say, I'm using Schwab, and the SEC is like, okay, cool. You're using like that answers like 85% of our questions. Okay, and there's like it's super templated as to what you give to either the state or the SEC if you're just going very traditional, because they've regulated everything for a long time. They know all the funds that are in there. They know all the portfolio managers, like everyone's in there, and they've known that very well. And it's actually pretty simple. It's when we move over to standing up a digital asset RIA, when you go, here's who I'm going to use as a custodian, and it's, maybe Anchorage. Well, okay, well, that's not that hard. They have an OCC charter. It's BitGo. Okay, they're chartered in a state. Then we're using maybe like Fireblocks. Oh, well, we're not quite sure how that's going to fit. And some of our clients, by the way, are going to self-custody. All right, then we got, okay, who has the keys? Well, we got to have one of the keys because we got to be able to affect transactions, but we can't have all the keys, or we can't have a majority. Like, you start to go down those roads, and there's a lot of gray area. And I don't mean gray area like shady. I mean gray area like the SEC is kind of like, I don't know. What do you guys think? And we're like, I don't know. Here's how we read the rules as they are right now. And unless you're going to go change the regulations, we got to read the regs as they are right now. And that's, partially attorneys' jobs, but we have to do all that. But then we have to figure out who is our tech stack. If you go in the traditional world, the tech stack, again, is like Schwab. Schwab's got pretty much everything. And then you go, okay, well, I need a reporting tool and a CRM, but everything like seamlessly works together. And in this world, it just doesn't. We have to cobble a lot of things together to make them look really nice and good, like you would see in the traditional world. And also here, like, people have traditional assets as well. So how are you going to view your crypto and your real world assets that are tokenized, and your self-custodied wallet plus your wallet that's custodied at Anchorage, and your Schwab account all in one place, such that a financial advisor can give you advice on the whole thing, right? Like it just doesn't piece well together right now. And so that's a good portion of my time and Clayton's time as well, is going, here are the regulations, here's what we have to do just to get approved. And then we're like the duck's feet under the water, just going like crazy, going, hey, we gotta put all these pieces together and make sure they're all compliant, right? Like all the custody and everything else that we have is compliant, and then go out to our clients and take a deep breath and go, we got this. Now, like we know how to manage money. Like that's the easy part at this point. The hard part is, how are you going to make everything move? And going back to Jordan's question, how are you going to keep everything private? How are you going to make sure that you're adhering to custody rules when we know in crypto and DeFi, you're moving assets from a custodian to some sort of smart contract and back? And at what point has custody changed? Like, those questions haven't been answered from the SEC, at least not adequately. And we still have to move forward and help the clients. We can't be like, well, we're going to sit here and wait for an answer, because we'll be waiting 10 years for an answer, unless we just go do it and then have the SEC go, why are you doing this? And we go, well, let me show you in your regulations where this is kind of what we read, and we tried to adhere to it as best we could. And we tried to help our client, because you can't go, well, we're going to wait on these regs, and therefore your clients can't get financial advice in that time. So I don't know. Did that help?
No, it did a lot. And if I'm hearing you correctly, it sounds like there's obviously a lot more behind the scenes with working with the RIAs in the crypto space. So I guess my only follow-up question is, and I'll shut up, is, so I would assume that there has to be a passion behind doing this, right? Because what would be the point in and going into this undiscovered territory with the SEC and working on all this stuff unless you guys are really, passionate and believe in the need of the crypto affluent that has, that has come into existence over the last 10, 15 years, the need they have for these services. Because it's obviously a lot more work for you guys. So could you?
Yes.
I guess could you just say when you had that moment of I'm going to do this, was the driving? One of the driving factors. Like, what was the driving factor? Was it like, I just want to get back into this registered financial advisory, or was it that there's a big hole here? We see a huge opportunity and people really need this, so we're going to take it upon ourselves to try to figure this out, or be one of the first to try to figure this out.
Well, the driving factor is I live in Colorado, so I was high and Clayton asked me. And I was like, oh, sure, that sounds like an awesome idea. No. The driving factor is, again, I've been talking about this and talking about how impactful I think the technology is and how important it is. And not like in some saving the world kind of thing, but it's just more efficient technology, right? It's more transparent. We need more transparency. It opens up the ability for more people in the world to participate in the global financial system. And I could get real, theoretical and philosophical and go, we have this huge growing wealth gap, and only the people that have the money are able to participate in the US, and they just keep getting wealthier and the poor keep getting poorer and all those things. But look, we always move forward from a technology perspective, always 100% of the time. All right, this is a move forward in technology. The financial system has not yet caught up, but I've been talking about this for 5 or 6 years. Clayton's been working with it from a law perspective for 5 or 6 years, and we know it needs to be done, and someone's got to do it. And if we would sit there and wait for the BlackRocks and the JP Morgans to do it, they're going to put it all in their own bags anyway, and we're going to be in the exact same system, except it's going to be a different database, right? I don't want that to happen. I want the people who have been diving into this and understand the tech and know those that are actually creating the wealth to get this started. And we keep saying this. If we're not going to do it, who else is? Like, who else is willing to push the envelope? Because we understand the underlying technology. So that helps quite a bit to understand that. So when we talk to a custodian, when we talk to someone who has a new wallet, when we talk to a new protocol, we kind of understand what they're talking about. And so we don't have to get over those hurdles like some of the big boys do. And we don't have a backlog of like 300 million other AUM that we have to worry about, right? We got nothing to fall back on. So we have to keep pushing forward.
Hey, Adam, I have a question. Are you guys and I agree. I think it all comes down. It's the custody issue has really been the major bottleneck, I think, in recent years. It's what prevented institutions from getting into the space. That is really when we get down to it, what needs to be resolved. I would be curious to know how you guys may be planning or thinking about working with traditional RIAs who, maybe don't really understand this space, don't really want to play in this space, but have clients that are asking them, help me get into, I want to put some of my assets into the space. I want to have proper diversification, and how could we work together?
That's actually a good question. So on the education side, I've been doing that for 5 years, right? Trying to explain to other RIAs, other financial advisors, here's how you do it. And the difference there, like I'm not looking necessarily to partner with them or help them or anything else at this point. Because what they're looking to do is take their clients and go, okay, we're going to allocate 2 to 5% to crypto. Right, of the rest of your traditional stuff, we're going to allocate 2 to 5% to crypto. That's a totally different conversation from what we're doing. We're on the other end of the spectrum where our clients are already and made their wealth in 98% on-chain in crypto, and we're helping them with more traditional financial thinking. Like, okay, I have all this wealth that I've accumulated in a super short amount of time, and I have to and now, like, I want to live my life. Like, they deserve to be wealthy. They deserve to live the life like a wealthy person now, because they're working hard at it and trying to build something. On the other end of the spectrum are the people that I've been teaching for the last 5 years. And for them, look, I'm happy to teach them, happy to kind of show them what to do if they want to wade into ETFs, if they want to wade into, on-chain custody or crypto custody or whatever. Happy to talk to them about it, but that's a completely different conversation of whether or not I allocate 2 to 5% and how do I do it and what is custody like and am I going to go with ETFs and all those. I have those conversations all the time and I've been having them for 5 years, but that's completely separate. And if we do what we do on the other end of the spectrum, eventually we know that just about everything is going to be on chain and we're going to have built that system so that when everyone comes over, we're going to go, all right, now we have the blueprint. But we have to start the blueprint from someone's already there and not have to convince them to get on chain. Because if you got to convince them to get on chain or buy Bitcoin or buy ETH or something, that's a huge lift. And I'd rather work with people who already have it.
Yep.
Great comments, great question. We have time for one last question, Jacob.
I'll go quick with this, effectively surmise, context, and then question. So surmising, when we say, because we said the word a couple of times, traditional, we're talking about, the old model, Vanguard, State Street, S&P 500, go ahead and grab a bunch of blue chips from these. And this is how you're going to build your portfolio. And then we're talking here with Enclave, what you're really doing is providing people education for the digital frontier of tech, which is evolving and growing. When we're looking at traditional TradFi, it's real black and white. We've got all the regulatory situations set up already. And when we're touching into digital assets, blockchain, all this stuff is a little bit more gray. And so Enclave's providing effectively mental clarity and advisory from someone and multiple people actually that are very skilled in the forefront of technology. You've been running this, you've been doing it for a while, and that's really, really valuable. I want to provide some context to what Clayton said a few minutes ago when we're talking about what happens when you're widely known, quote unquote, known and public. Myself, it wasn't a few million, but I'm quote unquote a celebrity influencer. I have a couple 100,000 followers, and I was holding a large amount of my assets, self-custodied, but largely backed by an ENS, all publicly accessible. You can see that it's mine. It's all right there. And I managed to get myself social engineered for over a year, which ended up costing me just under $25,000 because I clicked a few buttons on my phone, right? And so it boom, you touch a couple of buttons, it happens quick, right? And that's because there's no privacy there. I'm a public figure in the blockchain space, and I can get cased. People can understand what my likeness is, what my hobbies and interests are, learn about me, and then use that information as leverage to convince me to know, like, and trust them from a non-KYC account, and then boom, I'm done, which is something that you are protecting high net worth individuals through Enclave to not find themselves in. So my question, following all the context and surmising there, effectively, what's happening here is there is a lot of money in on-chain wealth management, as well as a lot of people that are getting a lot of money in blockchain that might not have touched that amount of capital before. So they're now a high net worth individual, but they don't have the necessary skills to then manage that money. And so you guys are positioning yourselves to be basically lead this forefront. And what does that look like? What's your ideal client look like? And there's more to that.
One of the things I think is important is that what you just mentioned and what I talked about, it's not just for high net worth people. It's for anybody, because the more you're going online, the more stuff you're doing digitally, the more you need to know how to protect yourself. I mean, anybody who's on this panel is susceptible to some sort of online fraud. And we all come from different backgrounds and likely have much different net worths, for a lack of better words. So everybody's susceptible to it. So what I would use for a very wealthy person is pretty much the same what I would tell for somebody who's just starting out. I mean, it's a good foundation to learn on, because most people, I mean, Adam teaches a lot of different types of people about this kind of stuff, and people learn some really bad habits by teaching themselves. So like Adam gets in a position where he tries to unteach people the bad habits and instill new good habits. So if people were to learn that from the beginning, it would make my job a little bit easier later on, honestly. So, but an ideal client, talk to Adam about that one, because the wealth management portion, I mean, that's in his arena.
Yeah, so ideal clients are like crypto founders, right? The people who get rich quickly, but it's not a scam or anything. It's they build a protocol, they end up launching a token. We're seeing a lot of those lately, and all of a sudden they have a great amount of wealth. It used to be called on paper. Now I'm calling it on chain wealth, but they don't really have it yet, right? So we're helping them with, okay, when you receive this, when it unlocks, when it vests, what are you going to do with it? How are you going to live your life now? And how are you going to maintain at least some of this wealth? Imagine the value of your token plummets. Are you still going to go, oh, well, I started a company, I ran it for 2 years, it did well. Now I'm left with some of the wealth that I created. So those are good clients. Protocols are good clients. We want to manage the treasuries, right? Because all that is on chain and they need help to run that, just like you'd be running a business. It's like a business that went public in a year versus 10 years, right? And now they have a whole bunch of money in their treasury, but all their money is in their own stock. And you got to figure out how to keep the company running for years on that. And then, just investors, people like you, right? That have a good amount of on-chain wealth that need to be thinking through now, okay, how do I live my life? How do I save for retirement, for kids' school, for what do I need to do? Just like things like insurance. I want to buy a car. I want to get a house. All the things you do with money, we help with that. It just so happens that mostly what we're talking about is on-chain money.
Thank you, Adam, for answering that question. Thank you for being here. Thank you, Clayton. Adam, can you quickly tell our audience where they can reach you at?
On Twitter X, my handle is at Interaxis8, INTERAXIS, the number 8. And our website is enclavegroup.io.
Thank you. Did you know that the HBAR Foundation has distributed over 360 million USD in grants to support innovative projects? With 195 grants awarded so far, they are truly committed to fostering growth and development within the Hedera ecosystem. And speaking of Hedera, we are thrilled to welcome our next guest, who is a key player in the groundbreaking organization. Please join me in welcoming Gregg Bell, who will share more insights about the incredible work happening at Hedera. Welcome, Gregg.
Thank you for having me. And I have to say that I thoroughly enjoyed the first segment of this conversation, because there's so many parallels that we have. And really, from my perspective, one of the things that we've been thinking about a lot from the Hedera lens is, how do you onboard that next billion people, right? And there have to be the safeguards in place for financial products. And that was a lot of what we were just discussing around how these safeguards exist. Similarly, there's, this intersection or pathway from traditional assets that are being tokenized and being made available in a digital landscape. And that's something, of course, that there is more and more momentum there in terms of the tokenization of assets. But then there are also the inverse of this, the crypto assets that are moving into the traditional landscape in terms of being wrapped in ETFs and other formats. And we're really excited about the potential for an HBAR ETF here in the United States. And so this convergence of two markets has been an area for me personally that I've really loved to explore, having started my career on Wall Street and finding my way into crypto. And so that it's becoming a one in the same market, which is really exciting. And the fact that there are innovators out there like Adam and Clayton and team that are bringing registered investment advisors to this digital landscape is so important, because it's the combination of the supply and demand that makes markets work. And as there are more digital assets that are being tokenized, whether it's money market funds or fixed income or commodities or gold or diamonds or whiskey barrels, there are tons of things that you can fractionalize, tokenize, etc. But there needs to be the investor base that's there. And so the work that you're doing there is very commendable, and I'm very excited for watching what you're doing, and I would love to be a part of helping you grow. And that's ultimately what the Hedera HBAR Foundation is all about. It's helping the ecosystem grow, and we exist really to sort of accelerate the adoption of Hedera as a technology stack, to increase the commerce that occurs within our network. And I love having conversations with entrepreneurs, because it's often around, how can I help? And to me, that's the easiest question to ask, and one that I love to find ways to be helpful and whatnot. So it's an exciting time, because there is so much tokenization, and we feel that Hedera is proven as the most scalable technology stack for builders to come in, whether you're a Fortune 500 company or an individual, to build on a foundation that can enable you to achieve your wildest dreams. And that's really where Hedera, having more transactions than Bitcoin, Ether, and several other networks, Solana and XRP combined, is the evidence of, here you have a network that is performing at the highest level, and enabling an economy to grow. And so we're really excited about that.
That is fascinating. Adam, you look like you have questions and comments over there.
No, I'm just listening and enjoying, and I will say that Hedera was, when I went down the rabbit hole 2017, 2018, one of the first I learned about, and was pretty excited about the protocol and everything. And so when we were able to meet Gregg here at ETH Denver at HederaCon, and excited to see like how Hedera has not only stayed around but continued to grow. And like the one question I would have, if that's okay, Crystal, if I could ask Gregg a question, is
absolutely
just if you could, Gregg, kind of explain the difference between Hedera, Hashgraph, HBAR, like we're like that kind of ecosystem there. I ask this of a lot of people. It gets a little confusing, because in our world, you don't just have the company.
That's right. Well, that's when you have a network, there's several different participants, but HBAR itself is, of course, the cryptocurrency of the Hedera network. The HBAR Foundation, where I sit, really is the venture arm, the investment arm, the capital that helps accelerate the development. We have core developers that sit within Hashgraph that build some of the incredible technology that is being run by some of the world's largest organizations like Google, IBM, Dell, LG, Hitachi, corporates like Mondelez and Tata, financial firms like Standard Bank and Nomura and others. And so these are those that are actually validating transactions on the network. And that's one of the things that makes Hedera unique, is that you have institutions that are trusted access points to the network. They're validating the transactions. You know where the validation occurs, so you're not worried about there being sanctioned countries that will maybe be receiving, gas fees for financial securities. And those are all these institutions that are validating are part of a governance network. They actually are instructing the way the network evolves, and they sit within Hedera LLC in terms of the governance component of that. And Hedera was born in 2017-18 in the United States, in Texas. So it's an American protocol. The two original founders were former veterans of the military in the United States, and so there's a lot of very thoughtful decision making that maybe wasn't the easiest to do in over the last several years operating in the United States, and now with some of the policy that's being more accommodative to building in the U.S., we're really excited to sort of lead that forefront. And that's a little bit. I often describe these as siblings. Each is its own party, but similarly aligned to seeing the success of the network or the family.
That's amazing. Thank you for that clarity. I have a couple questions actually. So Hedera's actually well known and recognized for its enterprise grade hashgraph technology. But Greg, what excites you the most about the potential for it shaping the future of decentralized trust? That's the first one.
I love the way you framed it as trust, because if there's not a trust problem, oftentimes the application of a blockchain or distributed ledger isn't necessarily there. And so I think in commerce, trust is also something that's sometimes lacking, or totally absent. You do polls, the trust of the U.S. financial system that retail has of banks is not at all that high levels, and the ability to transact globally with the speed of the internet in a trustless environment is so enabling and empowering for individuals and for businesses alike. I mean, you think about, I often go to this analogy of emails, right? You can write an email in so many different languages, English and Spanish or Chinese or Russian, and you send that email, it can go anywhere in the world nearly instantaneously. And it's because it's digital information. Now, value, assets, securities, once digitized, have that same ability. And so, being able to take money market funds, as an example, that are being tokenized today by firms like Aberdeen, the UK's largest asset management firm, or Fidelity International, or State Street, or BlackRock, traditional financial institutions that are going that direction and saying, here's an investment that existed in the traditional world, and now we're bringing it into the tokenized environment. So maybe this is a great product for the cash alternatives for some of Adam and his clients. But that's available to be increasingly accessible to the world. And when you have a technology that can be fractionalized, that can be more accessible, it's empowering for people, for savings, for growing their wealth, for storing value, for commerce. And that's where there's a lot of innovation around why you tokenize, where's the trust problem, and some of that is KYC, some of that is asset safety, some of that is relating to yield issues or orders of exchanges. We see a lot of DEXs that exist today. The original format of many of these DEXs that were online for exchange or order book enabled features like being able to be front run, which is if you're investing in a product and you're saying, all right, I want to buy this, and it's an open market, but there's the ability for someone to look at that because it is transparent and front run your trade. That's very problematic for regulated markets and just for the fairness of markets. And so that's one of the features that I feel that Hedera and the Hashgraph really have a strategic advantage from the technology perspective, in that there's a fair ordering. It's sequentially stacked, and so you can't front run. And so that's where we're seeing a lot of adoption from financial products being interested in tokenized.
Yeah, front run is one of those words I remember. Front running someone else's trade. Mm-hmm. It's like, who can get to the trade desk faster, right?
And that's there's the flash boys or high frequency that are setting up their servers right next to each other to be able to get that. That's
a movie about that too. Yeah. Like who's going to be the closest to the server and can put the trade in first. So yeah, front running, good.
I think an interesting thing you mentioned that it's backed on trust, and that's because it's a trustless, meaning it's verifiable, it's open, it's publicly accessible, which a lot of our networks ourselves, I know certainly for my networks, the US dollar, you said 0% trust based on it. I'd argue that it's maybe even negative, at least in my social circle, because it's not open, it's not public, it's not accessible. Who knows what's going on, where the money's going? It's all it's a house of cards, and that's just not the case for blockchain technologies such as Hedera. My other question, super hard left turn, so I'm going to pass. I don't want to change the conversation. I want to pass the floor over to Jordan because he probably has a question related to this topic.
No, you're all good. I just had a high level question. I saw you guys had HederaCon 2025 as your inaugural event. Just curious what some key takeaways were from the event about Hedera's growth and future direction with the positive administration that we kind of have going on in the U.S. right now.
Yeah, it was really great to have so much of the Hedera community present in Colorado for the HederaCon event. And what I loved was seeing builders from all over the world being able to be there and partner and find ways to work together, because the reality is everybody's stronger together, right? To the extent that there are ways to build something, you can do so faster when the right tools are in place, and you can borrow a tool from your neighbor, and that was really exciting to see. There was tons of enthusiasm. And just the breadth, of applications. That's, to me, always incredible when you have and this is true, I think, of blockchain technology broadly, right? But it can be applied to so many things. And maybe meme coins or NFTs get some attention. And that's one side of the spectrum. And there's financial products on the other. And then there's, satellites that are being launched into space by SpaceX rockets that are validating transactions and securing the information across satellite correspondence. And we're seeing that being done by a firm called WiseKey on Hedera. And so the device-to-device transactions and as we enter this world of AI, as there are paths by which they will be executing different things for us, agent to agent transactions as well. It's a whole new world, and the opportunities are really endless. So I think the biggest takeaway was just the opportunity that exists in front of us all, and the ability to partner. So as long as the foundations are strong, which we really feel that Hedera has those foundations, you can really go wherever you want, which is awesome.
Greg, what kind of companies are you guys looking to invest in at the moment?
Yeah, so we do a combination of grants and investments. The grant capital really is designed for smaller builders, individuals, or smaller organizations, startups that say, we need some help to integrate the technology stack. And that's where, as I mentioned, I loved it. They're like, how can we help? And sometimes it's in integrating the technology. Sometimes it's in making an introduction to someone else in our ecosystem, or one of the Fortune 500 companies that are validating transactions on the network. Sometimes it's in awareness and utilizing our megaphone to try to amplify a social message or other message. And then sometimes it's a strategic investment. And so, what we're seeing is more and more tokenization of investments. Those are debt instruments, equity instruments. And I love those coming from a financial market background, especially when they're able to show something that's on this technology that can be done that you couldn't do in the past. You couldn't do on legacy rails because of either the infrastructure or the expense, and you're now able to do, and that's where it can be empowering. And the example that I love to give there is, we all get paid. If you work at a large corporation, usually it's like a 2-week cadence. It's like, okay, well, we just get ingrained with that. You get paid every 2 weeks, or maybe it's every month. But why? Like, why is that the assumption? And part of that is the rails in which transactions occur. But when you have faster settlement infrastructure, when you have the ability to have micropayments that are at very low cost, Hedera's average transaction fee is 0.0001 cent, and it's denominated in dollars and paid in HBAR, so there's not the concept of surge pricing, the way you get in Uber or Lyft, and you're taking a taxi. And so you can do new things. You can condense that payment. You can make more on-demand type of products. You can stream money We're streaming data everywhere in our lives. This call is streamed, and it's just data. I know, and so that's, I think, really exciting when you can start to do things, innovating on compliance, innovating on payment infrastructure, innovating on logic statements. So those are the things we really love, and including, innovating on the counterparties. Are these AI agents that are facilitating more automated transactions, or is there a way to onboard your grandparents in a safe way so that they can participate in this ecosystem? So it's broad, I would say, the investment mandate.
Okay, so AI, finance, RWA. I believe I saw meme coins, metaverse.
Yeah, there are some
gaming,
meme
VC
coins in the
gaming.
metaverse. Yeah, I love one of the areas, going back to the trust question is with AI, which I think is a really big change in society. And how do we trust the input, trust problem of AI? How do we, is this a deep fake? Is this real? How do we know what the inputs and outputs of different various models are? Is there regulation that's going to require that type of disclosure? And so at HederaCon, there was a panel of some innovators, like the team at Equity Labs, which is one of the projects and companies that's building on Hedera, and they have a relationship with Intel and NVIDIA, and so they're working directly to embed in the silicon, in the chips that are powering ChatGPT, that are powering Google AI, that are powering all these different AI models, to address a trust problem of how do we trust what's going into these models, and how do we trust what's going out of these models? And those kind of applications I find incredible.
All right, we have questions. Alan.
I'm really curious, how, if we're going to be tokenizing some sort of asset-backed asset, let's just say US dollar was used to be backed by gold, and now they're not backed by gold, it's backed by the full faith of the US government. When we're heading into tokenization of real assets, so say like, hey, I want to tokenize gold, okay? How do we know that the gold is in the storage, and we want to fractionalize it for people to invest, and we want to create a stable coin, want to create this token, but how do we know that gold is still there? I think that's going to be the huge thing, and that's trust, right? It could be for silver, it could be for anything that has value. So I'm just curious on how to make sure the gold is stacked.
Yeah, right. There's a proof of reserves that everybody asks, and when it's digitally native, in some ways it's easier. When you're taking a real world asset and bringing it on chain for the first time, there's a lot more that is needed to address that trust. And so the way that we have done that really is through a series of attestations or notarizations, right? It's to say in a sequence that we can validate on chain that this event occurred at a particular time, maybe a minting of a receipt that says this gold was held in a vault at a certain location. And then a third party can come in and similarly attest to that vault being populated with the gold at a specific time. And so when you have multiple parties that are converging on the same conclusion in a time series of effective notary stamps, then you could substantiate the reserve of the asset that's there. And I was talking to a company, Voltic. I encourage you to check them out. I was speaking with them earlier today. But they tokenize a whole bunch of different luxury goods, jewels, art, watches, and gold and diamonds, and in the same sense, it's validating that it exists, that it is not a forgery, and having those series. And then I know they're really interesting because they have an insurance product related. So once it's validated and valued, as then you can insure it the way that many people insure their jewelry that they wear in case it's lost and whatnot. And now you have a financial product that is tied to that asset, and that can be tapped into for credit, that can be collateralized for loans. And so when we go down this world where so much more than our stocks and bonds are represented in a digital format, all of a sudden you have this collateral that you can tap into, and we hold value in our lives in so many different ways. And now we have ways to monetize or unlock the capital that we hold in jewelry or in Air Jordans or whatever that product might be. If there's trust in the value and if there's trust in the reserve, and the way you establish that is through this sort of series of attestations, and sometimes it is done with computers or satellite imagery or other avenues to attest that the geolocation exists or otherwise. Actually, one of the big areas that Hedera has focused around has been sustainability, and Hedera is a very green network in terms of its carbon footprint. But the carbon market has been one that had that lack of trust. People didn't know whether or not the trees that were being planted in a specific location, if they were funded through some sort of green bond, were actually there. Were they serving the needs of whatever the carbon financing was? And so there was a series of applications that were done for the same type of attestations around how do you ensure that a carbon product is not double spent and is actually producing the intended outcome.
This is so great, Gregg. I actually have a bunch of people I actually want to introduce you to, and I'm involved in 3 projects that are from the traditional world looking to create, utilize blockchain Web3 to create, better financial products for the masses. One is in the retirement space, one is in the private credit space, and one is in biodiversity. So I'd love to reach out. And my question would be, how, for those type of companies that are coming from the traditional world to do this, they're maybe not developers. They are just people that are just coming from, very, very traditional finance. Will you help them facilitate the introductions to developers? Do you bring developers? Like, how does that, how involved do you get in these type of projects?
The answer is yes to all. And I guess in a similar way to what Adam was describing earlier in the call in terms of educating, it's a big part is educating, whether it's an individual or corporation, around what do they want to do and how can we educate them in terms of the service providers that they need, the developers. Yes, we do have a sister organization that has some developers, but then there's a really wide ecosystem of development talent. And in fact, to interact with Hedera, you can do so in more programming languages than almost any other protocol. And so that's one of the powerful things. And usually you don't have to train your staff or find developers that speak or can write a specific programming language, because you can interact with Hedera through JavaScript, Java, C#, C++, Python, Go, Rust, Solidity, and more languages. So it's very flexible in that regard. And so there are a number of different development parties that are that we make introductions to and say they might be well suited to help you build your application.
Awesome. I'm going to reach out after the call. Thank you.
Great questions, comments. Do we have any other questions? One last question.
I'll share that if other people want to reach out, the easiest way to get in touch with us is the hbarfoundation.org. That's the website, and then you can go through. We also have an apply for funding, which is sort of the way you get into our system if you're looking for a grant or investment. And it's a short question, or you can, of course, find contact email information there as well.
Thank you, Gregg, so much for joining us today. We appreciate and value your insights. Thank you, Adam. We appreciate you as well. With that, Alan, can you quickly close in prayer so that we can do a bit of private networking for the last 4 minutes?
Sounds good. Let's bow our heads and pray. Dear God, thank you so much for another week of Cryptocaniverse where we showcase a lot of great companies, Enclave, and as well as Hedera, dealing with the RA space and knowing that, hey, we want to work with clients that have cryptocurrency wealth, and how do we protect their assets? How do we protect their identity and keep their information safe and private is very important in this space. So continue to work through us in all things that we do, as well as for Gregg Bell with Hedera, as well as bringing on more assets into on-chain. How do we build that trust in the ecosystem is so important in this space. So continue to bless the group that we have here. Continue to lead the way and put our faith in you, and knowing that we be patient, we will reap our harvest if we don't give up. So I just pray all this in Jesus' name. Amen.
Amen. Thank you.